Welcome back to Everything Money. We're glad you joined us again, the channel where I bring your viewer questions to a couple of wealthy guys managing millions of dollars, real estate, properties abroad, and tons of stocks and options. You guys do a lot, and it's incredible to be on this ride. And as a viewer, we're glad you're here. You know, Paul, I still am confused about the idea of dollar cost averaging. I think one of the best examples, obviously, this year has been Alibaba. We went from telling you at $300 that Alibaba was, we're not touching this. All of a sudden, when it gets into our sweet spot, now we're buying. And as it's going down, our viewers, the people in our community are confused why we're excited that we're buying at 170 and it goes down to 150 or 130. So the idea of dollar cost averaging, what we're going to talk about in this video, we'll get Paul and Mo's thoughts about the idea of what it really means to you as an at-home investor. And Paul, you're really educating me because I need another reminder about why, what the market's going to do, when I should be buying in. So things I'd like to highlight in this video, folks, is the idea, which is very new to me, Paul, is defining our position in some of our investments, how much we want in said positions. If they get out of hand, what do we do, Paul? Remember, I had some positions in stocks. I had a ton in Tesla, a ton in Amazon. If they get out of hand, what we should do. And the idea is, how do I predefine what I want in my position and how do I get there? So I present to you, Paul and Mo. Go ahead, Paul.
So for some reason, we've gotten some pushback lately on dollar cost averaging. I don't know why that is. I've seen comments and people say, and I even read an article recently, I didn't read it, but I saw a title that said dollar cost averaging doesn't work. Now, I immediately thought to myself, I never heard that before, so maybe it's something of interest, right? The whole idea of dollar cost averaging is you are never going to pick the bottom and you're never going to pick the top. So stop trying.
Yeah, right there, let me cut you off. You're right, Paul. I think I've said this on the show before, is we get a lot of slack because we're saying, well, we're buying Alibaba. And then people write in the comments, you idiots, Alibaba's down $20. And I'm thinking to myself, I had to say on the show, like, you're not going to buy a stock today and it instantly goes up for the rest of time tomorrow. That's something very hard to grasp.
Southwest did that. We bought it at 25 and went immediately up to 50. And I was like, I was mad. I was actually mad.
So go back to the dollar cost averaging.
So guys, let's say this is a graph of the stock market or whatever investment you're making. Let's say an ETF. This is the value. Here's what actually happens to the price.
Yep, this is Mr. Market.
Okay? You still started here and you ended here. But along the way, you went up and down a lot. Now, the idea is if you dollar cost average and buy at equal amounts, equal times all along the way, what does the average end up being, Seth?
Oh, that's straight line.
That's straight line. And that's all you're trying to do. If you're sitting here trying to buy here, give up now. If you're trying to short here, give up now. It ain't gonna happen. I will only say, Mo, have you ever seen anybody who market times well?
No.
Have you ever heard of anybody who market times well?
One person. Bernie Madoff.
That's, by the way, when we said one person, I was like, is he gonna say Bernie Madoff? That's 100% true.
Yeah.
It's never going to happen. So stop trying to do it. And stop getting upset when you buy something and it goes down. This is the idea of you're here, you want to end up here. Just realize that all of this is going to happen. So what's your goal? Every single month, quarter, whatever you decide your number is, you're going to invest the same amount of money in the same investments. And you'll overpay sometimes and you'll underpay sometimes. But the average will be this. That's just what's going to happen. That's all that's going to happen, and that's your goal. Now, why does this work? This works because we have found that when you go back and you look at history, when people brought their own guessing and emotions into investing, what ended up happening, Mo?
They ended up on the downside almost every time it was tried.
Their returns were lower than if they just followed a system that worked. And dollar cost averaging is a system. That's all it is. It is a system and it works all the time. Why? Because everyone out there will be emotional. Mo, go ahead.
Systems stop working when human emotion is put into them.
Correct. That's exactly it. Systems stop working, processes stop working when you break. We do a lot of value investing here, right, Seth?
Of course.
I wonder sometimes how much we bias ourselves into. So our friend Gary is a great value investor. He beats the market by 6% a year over a 15-year period.
Gary Mashuras.
Yes, great guy. But Mo and I have found some value investing strategies similar to the low book that beats the market that beat by way more than 6% a year over long periods of time. The issue is,
go on.
Can you stick with them?
Because the last 5 years would have been very rough.
You would have lost the market.
Yes.
I'm okay losing the market as long as I'm gaining still. Like it doesn't bother. That's the one thing the last 5 years have taught me is, oh, I made 9%, the market made 13, I still made 9. I don't care, because the last 5 years I've made 0 essentially.
Right.
I will make money on options. I look at this saying, guys, just focus on what your system is and stop worrying about everything else. Your goal is you're 25 or 30 or 35. Our average viewer is 30 to 40 years old. Let's call it 35 right here. And retirement is 65. You have 30 years. This is going to happen over. Go look at the stock market over the last 30 years. There were peaks, valleys, booms, busts, terrorist events, presidential. All these things have happened, and guess what? Stocks have gone up because the U.S. economy has gone up.
And if you want to go look at how dollar cost, how trying to time markets, go look at all those people on YouTube that we've talked about in past videos. Stockmo, Chris Sane. We've pointed out multiple times how they have picked the absolute peak and the stock is all the way down here and it hasn't come back up. And they were trying to time those things perfectly.
And a lot of people say I'm trying to time the market. I'm not trying to time the market. When I'm shorting the market, I'm doing a dollar cost averaging on the other side, where I sit there and say, this thing is way overpriced to a level that's on a very, very tail end. I think it'll work out for me. Same thing. At some point, guys, it's possible that this happens. Ready? That's possible. So you might be like, oh my God, Paul keeps saying the market's worth this and it's down here all the time. Doesn't matter. Eventually, it'll go back up. It always happens, guys.
So how do I initially set I'm not very good at this. So how do I initially say, for example, Alibaba, you wanted to set a position. You wanted to get Alibaba to a certain percentage of your, do you have this in mind as we're buying, right? Like what kind of helpful tips can you give us?
So again, I'd pick a process. If your goal is to have 3% of your, let's say you're picking individual stock like Baba. If you want to have 3% of your portfolio in Alibaba, decide what you're going to do. Say, you know what? I will buy 0.5% every month for 6 months as long as it's below this price. Okay, then just do it like clockwork. That's it. And guess what? Some months you'll be better off than other months. Hey, recently it was 138. We bought it at 184, went to 210, and we were like, oh shoot. And then it collapsed to 138. So we would have bought it at 184, 210, 138. What's our average?
Somewhere in between.
Or in the middle.
170.
Yeah.
Still better than my original purchase.
That's exactly my average right now.
Yeah, I'm 174 is my average. Okay, you're fine. You will be fine. Just stop, just get out of your head that you're gonna sell at the peak and you're gonna buy at the bottom. It ain't gonna happen. You might do it, if you do enough deals over the next 30 years, enough stocks, you will do it a couple times, but not because you're smart, because you got lucky. That's it.
It seems like there's a lot of buying at the peak and selling at the bottom.
Well, that's usually when the people are.
That's what happens with timing markets.
And that's what happens with bull markets and bear markets. The bull market, people buy at the top because they see all their neighbors and their kids, neighbors' kids, all making tons of money off these stupid companies. And so they start getting into it. And then it collapses, and then everybody gets out. I always tell people what the whole Amazon went from 113 to 6. You know, somebody sent a comment in a chat recently that I'm in, and they go, Paul, look at this. Look, Amazon. And all I said was no comment, because I'm like, you would have been the person who sold way before it hit 6. And then as it climbed back up, you just said, I don't trust Amazon. Because you'd have sold at 50, and as it was going to 70, you'd have been like, nope, it's still a garbage stock. Okay. That's it, guys. Bull markets make everybody feel like geniuses. But the real way to make money long-term is dollar cost average. That just basically means as the thing goes up and down, your average price is going to change because you're buying every single month, every single quarter in a systematic fashion. And guess what? You'll go to bed at night like this, and you'll wake up great. And then 30, 35 years later, you're gonna wake up and go, holy crap, I've got a lot of money. And that's what's gonna happen. It happens every single time.
One of the main questions we get repetitively is, we talk about an impending market correction or crash. It's just been so overpriced for so long, Paul. People say, well, should I still be DCA?
Yes, you should, because that exact same thing I just talked about.
Yes.
You don't know when it's gonna happen. You don't know when that's gonna happen, right? And all this time, the market's still going up in value as it's overpriced. Here, the market's worth this. Here, the market's still worth it. It still went up in value. A guy like me, who has 8 or 9 businesses upstairs, options, and all these different revenue streams, and more money than I need, and I don't mean that in a cocky way, I mean, that's the reason why I can do these things and pull my money out, saying, I don't understand it. But if you're saving for retirement, you can't make those decisions like that. You have to be in the market and just dollar cost average. I'm trying to get 15, 20% returns. That's a lot different. I'm willing to be patient to do that because I don't need the money to grow at 7, 8, 9, 10% returns. I can wait for the right deals that get me the much higher rates of returns because I bought them at times I liked them.
Interesting stuff, Paul. I still have to grasp this. The idea of timing, Mo.
Yeah.
It's
very hard. Everybody thinks that, especially new people to the market, they think they're going to be the ones that are going to figure out the magic elixir to time the market.
Yeah,
You're
trust
not
me,
gonna be the one.
it ain't going to be you. It's just not going to be
and
you.
it seems even more difficult with timing crypto markets. There's really not much sense behind any of it. So,
Well, it's no different than any other market that's just overpriced. You just sit there and there's no basis in reality for it. And of course, everybody thinks I'm wrong, and that's fine. It's just, guys, if I don't understand it, I don't do it. That's why dollar cost averaging, if I were saving for retirement, that's what I would do. 100%. Wouldn't even blink an eye.
The reason we created the software was exactly for this, because people watch the videos, want to do their own analysis when they see me do this. So we created the software so people could do this. You get everything you see here on the Everything Money channel, on the Everything Money page, all our tools, plus all the ones coming up. You get over 30 years of financial data. You get access to Seth, Mo, and I. You get all the 8-pillar analysis, that stock analyzer tool, real estate calculator, retirement calculator, 8-pillar portfolio. We can put in 50 stocks at once. It tells you how they all look as a portfolio. All of this plus exclusive daily content. We have 1, 2, 3 videos a day that we release only to our users of our software. You get it all in mobile form. All of this is available on your mobile app, all for only 90 cents per day. 90 cents per day. If you can increase your returns or decrease your losses by 1 or 2% a year, that could lead to hundreds of thousands, even millions of dollars in extra net worth for only 90 cents a day. 2 ways to sign up, everythingmoney.com or Patreon. The benefit of everythingmoney.com directly is you don't pay sales tax yet because we're not big enough. So sign up, only 90 cents a day. This is a no-brainer, less than a cup of coffee.
That's our take. If you like this discussion about dollar cost averaging or mindset about investing, you can join a community below, everythingmoney.com. You can join 6,000 people talking about this, like-minded folks. And if you feel alone out there, join the community. You can talk to us about it. That's our take. Keep watching more videos. This is a long process, Paul. It's taken me many years to grasp what you're teaching. And
It takes me many years to grasp what I'm teaching.
I guess that's true.
I'm just kidding.
See you next video, guys. Appreciate it.